Good afternoon, and thanks for joining me for this week's ADM Agriculture Limited Grain Market Update. My name is Chris Colley and I trade the feed barley here at ADM, and I'm just going to run you through the barley market for the coming season quickly. So to start off with, let's just take a look at the main S&D points for next season. Production-wise, according to the HDB Early Bird Survey, following much better autumn conditions than last season, there is a 33% increase year on year to 394,000 hectares for winter varieties going in the ground or gone in the ground. Springs, however, are down 26% year on year to 790,000 hectares for an overall planted area of 1.184 million hectares, which is a 13% drop on last season's planted area. After a difficult start weather-wise for the spring crop, conditions have improved over the last few weeks, and we've seen a lot more optimism over crop prospects for this harvest. Currently forecasting a total production figure here of just over 7 million tonnes based on a yield expectation broadly in line with the 5-year average. This has come up considerably in the last few weeks. This puts production for 2021 down by roughly 800,000 tonnes to 1 million tonnes over the last two seasons, which were both big barley production seasons. So just to move on to demand, total domestic consumption is due to be down by almost 1 million tonnes year on year. Malting barley demand is increased over last season as the UK emerges from the COVID-19 pandemic and beer consumption is increasing. However, the big drop comes from a fall in animal feed demand of roughly 25% or 1 million tonnes to around 4 million tonnes as currently forecast. This drop in feed demand can be attributed to more expensive feed barley values against other products. Currently, feed barley in the UK is viable in the £13 to £15 under physical feed wheat price in the UK. Despite a smaller crop year on year, however, we're still forecasting a reasonable exportable surplus of around 1.5 million tonnes due to this fall in domestic demand. This should leave us or equate to an export figure of around 900,000 tonnes for the new crop campaign. So what does this mean for the market? We've seen supported prices in recent weeks as the UK has managed to capture a bit of North African interest, primarily from Morocco. This has put a good bit of demand into the hands of the shippers of the UK in a very liquid market where we see very low levels of farmer selling, actually, despite the better crop prospects. And this lack of selling and decent demand has just caused values to jump significantly in recent weeks. However, from here, we would not rule out some harvest pressure as the recent North African interest has largely now been covered, and the next best demand for our usual export destinations of Spain, Ireland and the Netherlands is roughly at any one time, obviously depending on currency, etc., £5 to £10 sterling below current UK replacement levels. And obviously with a larger winter crop this year, we do expect more feed barley to be coming onto the market at harvest time, and therefore we should need to depreciate, certainly in those earlier positions, in order to find that coaster export demand. Overall, though, the macro moves in the market should continue to be driven by the wider grain complex and supply and demand issues globally. And these are topics that my colleagues have covered in detail over the previous weeks. However, within the UK market, we would expect feed barley to remain supported against other products and to hover around that £15 a tonne discount to wheat mark for the remainder of the season, certainly in the forward positions, as the tighter nature of supply this season should just help keep a floor under values. Anyway, that's all from me for today. Thank you very much for watching. I hope you all found it useful. As always, if you have any other questions or comments, please feel free to reach out using the details at the end of this video. Thank you very much.